Hello. Yes, good afternoon, everybody. So today is 19th of June 2019, and our webinar for today is risk management. So in this webinar, I'm going to look at it like in three phases. First of all, I'm going to give you like two screenshots of how people perform if they control their risk and if they leave their risk to float. So just a second, let me upload that. Look at the screen you're having on a screen now. The image you're having on a screen is a professional performance chart. This is how, if you control your risk based on what I'm going to tell you, this is what it will be your chart. The green bars you're seeing, like the first one, the first one which opened here and closed somewhere here, this is the profit. Then any red bar that you're seeing, including this, and the rest, stand for losing trade. Anyone who is professional in Forex market, this is how your chart is going to look like. This is one simple chart. Anybody who is like you're not scalping, you're a long-term trader, this is how your chart should look like. You have one trade having a very good money, opening maybe somewhere here, then goes all the way and gives you the maximum. But anytime you lose, you have a bad trade, you actually lose very little. Very little. There's a big win, and then there's a minor loss. There's a big win, and then there's a minor loss. There's a minor loss, a minor loss, and there's another big win before we see some other losses. So this is just one way you perform. Anyone who is a professional, you don't have to have all winning trades all the time. But the reason I'm displaying this on the screen is because I've noticed that some people don't know how to control risk. We don't actually understand how we can control the amount of money we are risking in a trade, or the amount of money we expect to get in a trade. If you've taken a buy trade and expect it to go maybe up to 100 pips, the best you should be doing is let it go up to 100 pips, but close losing trade based on the amount they have lost. I don't know, that should make sense like that. Anytime I have a losing trade, I close it based on the amount they have lost. And anytime I close winning trade, I close them based on their winning number, the number of pips that I've got. So if in a trade I expect to get like 100 pips and price has gone up to 75 pips, I take the winning one in terms of pips, but the losing one, I cut them based on the amount that I've lost. Like in this case, assuming I have 100 USD in my account, the minimum I lose, the maximum I lose in any given trade is just a single dollar. So I'll lose one, I'll lose another one, then get one good trade which gives me around 80 USD. That's enough. Then I lose another one, then get one good one, lose the next one, the next one, the next. So if you calculate the total number of trades you're losing, the ones we've lost, all of them, you add only one good trade, you covered everything. So this is for people who are trading, day trading, those guys who are not doing scalping. Your graph is likely going to look like this. But it can only be like this if you are controlling your risk. That is, if you know very well how much you expect to lose and trade and how much you expect to win in a trade. Then another thing, the reason most people don't get it right is because anytime you have a price going, like you have a trade that's going your way, instead of leaving the trade to go up to maturity, you actually stop it before that time. That is one thing I want to discourage at the moment. That anytime you have a trade that is winning, let that trade win completely. Let it go up to the maximum price it can go up to. And anytime you have a losing trade, like if you have a green trade, a red figure, that is your negative something, cut it short earlier and stop trades based on the amount of money you've lost. And that money must not be oscillating, like it must be a fixed value. If I'm risking 10, I'm assuming I have 1000 USD today and I decide to risk 10 in all the trades, it should be that one fixed 10. It does not matter how many goes against me. All I know is anytime I get one good trade, covers for me everything that I've lost in the previous trades. There's another chart. We have this for a scalper. So you can see in this case, the total number of winning trades are actually many, but then there are few losing trades. And notice something. This is exactly opposite the one we looked at, professional traders chart. This guy is also a professional, don't get me wrong. This guy is still a professional. whoever trades like this, like whoever trades where they have majority of trade winnings, but then they have one big losing trade, they're still professional in their own right. But what I don't want a case where you'll get like 5 trades winning and you win 10 out of all the trades. Maybe you win 10, 10, 10, 50. And then if you lose one trade, you actually lose 40. I don't. That's one thing which, that's the main reason most are losing money. Because they don't know exactly how to control. Anytime you want to scalp, just know very well you are heading towards the danger zone. It's okay to scalp, you'll still make money. You may be lucky to enter when price actually winning, so that you find that you've won all these trades. But the truth is, if you lose one big trade, you've lost everything. So we don't want something like this. We don't want to find ourselves in a situation like this where you've been winning 10, 10, 10, 10, 10, and then you win the last 10, then the next one actually loses something like 70, and you won just 100. That one has almost brought you down to 0. So we don't want anything like that. It's okay to scalp. It's still okay. But then you have to have a strategy to it. So there's one thing which I want to say here. I want to mention something here, that the first step towards controlling risk is understanding what you're doing. You must understand perfectly well whatever you're doing. If you're on a chart like this one, you must understand very well, have a clearly defined strategy. Understand that if this happens and this happens and this happens, that's when I enter trade. And if the opposite of this happens, the opposite of that happens, that's when I exit a trade. That is a strategy. That's a strategy in itself. Like, let us look at MACD first of all. I want to use MACD to explain an index. Yeah, have this. Then I add MACD. So let us mark this here. It should be green. You want them to be green. Sorry. This is bold. So if you check this chart properly, the first step towards succeeding in risk management is that you have to understand perfectly well what you're doing. Understand that you have to have a strategy. A strategy could be something like this, that if this is MACD, there's a line here, invisible line, it's 0, 0. And then we have the columns of MACD, and the red line you're seeing, this is the signal indicator. Anytime you have the signal below 0, 0, and you also have the columns of MACD below 0, 0, that is a sign that we are heading to the lower side. And anytime you have the columns of MACD above 0, 0, and then you have the signal, which is the red line, also above 0, 0, that is a sign that we are heading upwards. So in case there's something like that, you're supposed to be looking for a buy. That's a strategy. You say that anytime, the first time I see this, that the columns of MACD have begun appearing on the lower side, I wait for the signal indicator to go below 0, 0, then I pick a sell from that point. That is a strategy in itself. So the first thing you have to know is that you have to have a strategy. There is no risk management without a proper strategy, and there is no proper strategy without a proper risk management. If you don't have a strategy, ensure you can control your risk. But if you cannot control your risk but you have a strategy, then that strategy is useless. Like in this case, I would come to a chart like this. I have my level. This is the indicator which I'm using. I'm going to use this to determine when I'm buying or selling. So if you can remember, I actually took this trade not based on MACD, but based on something else. But let's see if the same thing would apply if I was using MACD. So the procedure here is simple. Columns of MACD begin appearing above 0, 0, I pick a buy. Columns of MACD begin appearing below 0, 0, I pick a sell. So in this case, basically, I could have gone up to this point. I could have only bought it immediately when the first column appeared above 0, 0. Immediately when this happens, I pick a buy on the next one, which means I could have bought it here. And that buy means that if price is to go my way, let it go up to the maximum. Don't find yourself exiting trade before they mature. Don't find yourself exiting trades before they mature. That's the first thing. Leave trades run. If you have a winning trade, for example, my target is like 100 pips in a trade. Let every trade that I have go up to 100 pips. But on the other side, as I've just mentioned, if you have a trade that is losing, stop it at a round figure, at amount that you expect loss, not the number of pips. because pips have values. Pips have values. If I'm doing 0.01, then I say I want to risk like 10 pips. Maybe 10 pips is from here up to here. If I'm using a volume of 0.01 on the left hand side, the volume, this one, I want to lose 10 pips, but the volume is 0.01. Anytime the price goes up to that 10 pips, I'm stopped. The same would not be, it not happen the same way if I had here 0.5. If I had 0.5, but I'm risking 10 pips, the amount would be larger. So the losses must be stopped based on the amount that the account has lost on that trade, not based on the number of pips. But if you're calculating profit, calculate them based on the number of pips. That's the easiest way. So what I mean by pips is this. If price moves, maybe any change in price from this point, the distance between this point and this point, that should be 2886.0, 2862.5. This minus this is 1. Subtract that properly, 3. So 23.5. 23.5. So from this point to this point, we have like 23 pips. That 23 pips is not always the same amount if you change this one. That's why the loss has to be based on the amount of money you've lost, not the number of pips. And if you want to calculate profit properly, calculate profit based on the amount, like the number of pips that has accumulated ever since you entered that particular trade. So that's the first thing. Want to trade successfully, have a strategy, and then control your risk. But the amount of money you choose to lose in a trade must be some round figure. We want to trade like this person. You want to trade like a professional person. A professional person means there's a limit they can lose in a particular trade. There's no unlimited losses. Anytime we have a trade going our way, we let it go properly. And anytime we have a trade losing, we actually stop it before it has depleted our account. So like in this case, I would have one big good trade, get a lot of money from that, but then I lose something small. I lose something small, and then again something big. There's a small loss, there's a big win, and then there are 3 consecutive losses. But notice something, the losses are insignificant compared to the amount of money I win from a trade. If you maintain the same approach, you'll actually get yourself on the right side of trading. This is why most people lose money. They don't know how to control their risk. Somebody would find a trade like this, come to something like this, hit this temporarily. You find somebody comes here and they enter this trade exactly the same way I've entered. In this case, I'm risking around this 11 USD, but I expect to get at least 35 USD. So another thing, for every trade you expect to risk an R, ensure that you are going to earn at least 2 times what you are risking. So if you are risking 10 in this trade, there is no way to become like unprofessional to start getting like that. You risk 10 at the same time you expect to get only 5. That does not make sense for me. That is one thing that you have to take great caution. Don't find yourself in a scenario where if you enter any trade, you're only expected to get a quarter of what you're risking. That does not also make sense. Ensure that if you enter trade, if I pick a buy from this point here, that buy has to go up to take profit, and that take profit must be at least 2 times the amount of money I'm risking. And another thing, even the amount of money you're risking, it must not be more than some round figure which yourself have put across. So don't risk more than you can accommodate, because there's one thing that you need to understand, that anytime you're in a trade, if I've earned from this point to this point, assuming this is 100, actually on the other end of that trade, there's somebody who gives me that money. And anytime I lose a trade, which has been mentioned here as red, there is somebody on the other hand who I'm actually giving the money to. So the only control you have here is the amount of money you give them. Don't be too generous with your money. Don't be too generous. It does not make any sense. Don't be too generous. The person on the other hand is also calculating just the same way you're calculating. They want to make money from you just the same way you want to make money from them. So this does not always happen if you control the risk properly. Even with all the manipulations in the market makers, whatever you choose to call them, all those things, if you know how to control the risk properly, there is no way you lose money. There is no way. So to perform even better, attach a strategy to the risk management. You can say we have there's a place here on the FreshForex website where there are information about how you can control your risk. This is not what I'm referring to, but it's really useful if you can find time to read it. You can find time to check this on properly. You actually understand whatever I'm trying to say. It's just the same thing. I'm putting it now in words and in chart so that you're able to see it properly. So the most important thing is not the amount of money you expect to get in a trade, but how much are you willing to lose in that trade? If you find that you have 100 USD, but in each trade you are risking 20 USD, there is nothing you're doing. It's okay, it may look good, you may make money, but just know that if you win 5 consecutive times, if you lose 5 consecutive times, you lost everything. But if you're risking 5 USD or 2 USD in any trade, but you have 100 USD, then it will take up to 50 trades for you to lose the entire 100. That's how it's supposed to be. Don't be greedy. It is greed that makes us not to make money. Because somebody will sit here. Because somebody will sit here, and then they come and realize that this is a very good trade, this is a buy, and then they calculate the amount of money they expect to get in this trade. This is like 35. I expect to get 35 USD if it goes my way, that is. And if it goes against whatever I want, then I'm going to lose 11.50. So someone may sit down and then begin saying that for price to move from this point to this point, this is big money. It's like small money for them because the volume is small, 0.01. So to counter that issue with volume, they increase the volume here, correct, which they have the power of. And then by increasing the volume, they have unconsciously also risked a lot. They've increased the amount of money they're going to lose in that trade. So they'll find themselves trading with fear, because if the price goes against them, they've lost everything. But if price goes their way, they earn a lot. So they're so much interested in the amount of money they're going to earn more than even the amount of money they're going to lose. While in truth, you're supposed to be concerned so much with the amount of money you are risking more than the amount of money you're going to get. That is what brings this graph. It does not come out of nowhere. If you want to make it Forex market, ensure that your risk is controlled. That is the most important thing. You'll not make money if you have floating risk. And the reason people do, like somebody may blame this on emotions, that anytime price, like I've entered this buy, assuming the price is not going up, then it begins to go against my way. I now move this stop loss below, and then I blame that on emotions. That does not work. Don't be fooled. Like the market will still go against you, whatever you choose to do. So the best you should be doing is let it be fixed. If it's 10, let it be 10, and if that 10 has lost, you let it be. Don't find yourself dragging the slope. This is the cheapest way, the easiest way to failure. Price will still move against you, and even the stop loss while you're seeing. So you'll find instead of you having a stop loss here so that you risk something small, you've actually lost everything, or even half of your capital. And here in Forex, capital is what drives you. Capital is what keeps you alive. Without capital, there's nothing. Without capital, there is nothing you're doing. Even with the best strategy, but without capital, there's nothing you're doing. So protect your capital as much as possible. That is everything. Protect your capital as much as possible. So there's another strategy. There's another chart here, a scalper's or a new trader's performance chart. If you're a scalper, somebody who enters trades and then you exit immediately, this is probably how your charts will look like. You enter buy, it goes your way, you take profits at 2 USD, but then the next one, you let it float, and then you end up losing 20. Get 10, 10, 10, 10, and then 20. This ultimately you may make money, but there's a point where you will find yourself you've lost everything. I've tried that personally, it didn't work at all. And it's mostly popular with new traders and those that are trading news. Any new trader will want to take profits early and exit. Anytime price goes their way, they are quick to take profits. But when price goes against them, they actually are more generous. They let trade run against them. That should not be the case. That must never be the case. If you have a trade that is winning, you hold on to it. And if you have a trade that is losing, you cut it short. You cut it short. I mean, there's no point for holding on to a trade that's not winning. So there's another thing here which I want to say. As I've entered this trade now, the reason I'm buying it and I didn't sell it here is because of one thing. Focus on overally what the price is doing from the longest time frame possible. Because we are not calculating our risk based on what's happening just now. We look back into the past, check what has been happening, and then we apply that to what has been happening, to what is currently happening, so that you can control risk properly. Like in this case, most people don't realize this, that if you are using just MACD, this MACD is free, it comes from with MT4, and you are using the same strategy I've mentioned, you probably took a buy trade here, took a buy order when this happened, took a buy here. You've been in money all the time up to this point when price went below. Assuming you sold there, that was a loss. Bought there, that was a loss also. You sold, that was a loss. And then you took the next buy here. Up to now, you're still in money. So most of them look for simple things that are likely to work your way. And to get that simple, it's better to trade stocks, CFDs, or indices. Things that are obvious that if they pick a direction, they are likely to remain in that direction for the longest time frame possible. Like if I was buying this one since 2013, it was actually bullish from 2009. It has been upwards all the way. If I bought it at that time, I was supposed to be in money up to, like, this is 2 years. And from those 2 years, 2016, I'm supposed to be in money up to this point, 2018. This is like 2 years. So what this means is SP500 will remain on an uptrend for like 2 years and then go down, then pick another 2 years the same direction. What that means that even now while we are here, we expect price to move upwards up to around 2021. So this is what we trade. This is what we're supposed to be focused on. Trading where the trend is guaranteed, like where you expect price to continue in that direction for the longest time frame possible. Don't focus. If somebody may want to say that currencies move faster, that these ones keep gapping. Yes, they keep gapping, but they can gap also your way. That's why you need to trade all of them. Keep trading. Trade. If you can trade CFDs, the better. If you can trade indices, the better. Look at this. Look oil. This is just how people make money here. I would have a very good risk management strategy, but then at the same time, to enhance that risk management strategy, I use pairs or symbols that are guaranteed that they're likely to move that direction. Just look at it like this. If you had bought it here, look oil, when this happened, when the columns of MACD began to rise above 00, you actually took a buy. That buy up to now, you're still in that trade. It's enough money. This is very good money. So it's better to invest in things that are almost guaranteed that if you take that trade, it will head your way for the longest time frame possible. That's the best way. Even with the correct proper risk management, you may still find yourself losing if you don't trade the correct symbols. So the ones I'm mentioning here, these are at least the best one, that if you buy a trade or you sell now, they're likely going to remain in that direction for the highest time frame possible. We also have from this point here. Yeah, so this also is upwards. If somebody had bought here, price actually went up. I'll pick this, we don't use it. If somebody bought when this happened, it went up, came back down, there's a retracement before we saw this move to the upper side. So this is almost guaranteed. Something like this, if you buy Look oil, it's almost guaranteed that it's going to move in that direction for the longest time possible. And that's what makes money. Don't forget, that is what gives you money. We also have this Microsoft. So the ones I've mentioned are the ones I've been monitoring, and I think they can give more money if somebody is patient to wait for them. Just look at the way this has been upwards. From this time, from 2016, this is like 3 years now, price has been upwards, which means whoever bought here blindly actually had money, and in between, because the trend is still upwards, we don't expect somebody to focus on a sell. Keep buying, keep buying, keep buying, keep buying up to the top. Which means now, even as you speak, you're supposed to be in a buy which you took like 3 years ago, still in very good money. If you notice that the trend is upwards and everything is showing you upwards, focus on the trade on that one. That way, you'll be able to minimize risk. That's another way to minimize risk. Only trade things that are guaranteed. Only those that are guaranteed that if you enter this one, is likely to go your way for this long. And if you sell this one, is likely to remain this direction for this long. Those are the ones you focus on. If you find a trade where there is no clear trend, leave it. Rule number one, leave it. Trading against the trend is the most dangerous thing you can do in the forex market. So if the trend is upwards, like in this case, I would focus on a buy. But don't come and find yourself around this place here. Then you start reasoning that this is a resistance. A resistance you're supposed to sell. Don't do something like that. Wait for price to either break above it clearly so that you can pick a sell, or it should trace down and then break above so that you can buy it. The next thing you can do is also to wait for it at a support so that you can buy in the direction of that trend. I hope this makes some sense. This is how you, if you want to make money, if you truly want to make money in forex, ensure that your risk is some round figure. Then focus on only those symbols that the trend is established that we are going to this direction. Those are the ones you focus on. So if I'm losing here, anytime I lose a trade, I'm losing an amount of money. I'm not losing number of pips. I look at losses from the amount of money I expect to lose. And anytime I get a winning trade, I win them based on the number of pips. Because if, assuming I'm using 0.50 here, this is the volume I'm using, 0.50, and I'm risking 10. That 10 is a number. But if I'm risking 10 pips, it is different from somebody who's risking $10. So losses are calculated based on the amount of money you lose. But profits you calculate based on the number of pips. So that if prices go on my way like 100 pips, that's a very big money compared to $100. So I hope that makes sense, and that should bring us pretty much to the end of this webinar. So far we've looked at just the most important thing, that don't trade where there's no clear trend, and calculate your losses based on the amount of money you lost, not based on the number of pips. If you calculate your losses based on the number of pips, then it means the amount of money you're losing will be oscillating. It will not be the same amount of money if you keep changing this. If you say I want to lose 10 pips, but then you keep moving this one, 0.50, sometimes it's 0.20, 10 pips is different. But in case the losses are calculated based on the amount of money you lost, then whether this is 1, 2, 3, or whichever amount, as long as it is 10, you're out. So this should make sense. Trade only things that are guaranteed. So you can make use of the indicators that are already on MT4. Make use of these indicators. As you can see, there was a buy actually. When this was showing us a buy, there's a buy everywhere. Make use of these indicators properly. Try to use them. Try to understand all the indicators, and ensure that anytime you enter trade, you don't exit before expiry or before maturity. Anytime price goes against you, stop early. Anytime price goes for you, ensure that you hold on to that trade. So I recommend, if somebody is to ask me exactly what I recommend for us to anybody to trade, you should be buying Microsoft shares. Look for a buy. The trend has been upwards all along. Look for a buy. Then another weird recommendation I can make is buy Boeing. Wait for price till it has gone up already. I recommend you buy it. Look for buy position. So despite the accident which happened just recently, there's still possibility that we are still heading upwards. Still a very huge possibility that we are still heading upwards. So the reason I'm saying that is because the accident happened only here, and that accident has its effect, which you've seen already. It should recover very soon. So thank you very much. That should bring us to the end of today's webinar. See you again tomorrow at 7:30.